All right, what's up, everybody? It's Brandon from the Green Candle Investments. We're here with another episode of the Sunday Scaries Stock Talk podcast, and I have some very special guests with us. But first, a little housekeeping. So obviously, Dan isn't here with me on this one. So for those that follow all our stuff going on, he's no longer going to be hosting the podcast with me or doing any of the spaces or anything like that. He got a new position, so make sure to reach out to him and congratulate him for that. But unfortunately, that new position doesn't let him do any podcast or content creation or anything like that. So it'll be me flying solo for the time being. But yeah, like I said earlier, we have some special guests. We got the hosts of the Woke Antidote Podcast. It's a great podcast. You guys just started, right? So why don't you get into a little bit of what brought you guys to start the podcast and what it's all about?
Yeah, well, thanks for having us, Brandon, and glad to be here with DB. Yeah, so basically, what happened was we frequently text about this stuff, both me and TB as well as in group chats, and we just thought it would be kind of fun to bring kind of the group chat text to life because there's so many of these issues out there that people are talking about in their everyday life with other people, or it's sometimes people, they actually don't have an outlet to talk about all this crazy wokeness. So we thought we would either be an addition to people who are interested in this kind of stuff, or we would be just a companion if you want a little antidote to the crazy wokeness that's taken over the world. So we figured we were already kind of chatting about this anyway, and then why not make it into a podcast form?
Yeah, just to add on there, I think, like for me personally, I've always been very politically interested. So I've listened to a lot of podcasts. Big fan of Ben Shapiro, Breaking Point specifically. And as SB said, we have group chats where we talk about with friends. And what really kind of crystallized for us was just thinking, there really isn't a podcast that connects us with the average American, the average person, just kind of seeing the craziness around them, as well as just normal events, whether that be sports, stocks, Bitcoin, etc. So that really was the brainchild for this podcast, where we're just really talking to you as a normal person, sharing our authentic reactions to everything. So there's a lot of craziness in the world. You can get a lot of really deep political coverage in other sources, but we figured this might be the one place where you can get some humor, as well as learn something along the way to kind of add some sanity to your life.
Yeah, for sure. And I've definitely I've listened to every one of the podcasts you guys have put out, and it's great. It seems like kind of like you said, like a different light that you're not really seeing in the I guess era of politically correct and everything like that. So why don't you guys go in a little bit of your background? You don't have to get too deep into the specifics, but just to kind of, I guess, shed a little bit of light as to, the industries you guys work in, where your podcast is based on.
Yeah, so I work in investments, as I've talked about on our spaces and whatnot, and that basically means that I'm in the markets every day, looking at all the news that comes through. I focus specifically on a couple of key industries, a lot of like communications type companies, and so I'm in the weeds of these media stories, of the stories like Netflix, companies like that. So I really enjoy doing that. It's a lot of fun. And then, obviously the market, there's a lot of twists and turns to that. And it's a little bit different. Kind of the macro calls are a little bit different than the stock and company specific calls. But basically, I've got a love for the market. I've got a love for these numbers. And it's been volatile lately, but I think the general concept of the market, but then also kind of where we are in this broader cycle of finance and the monetary system. I think that's really fascinating, especially then how it relates to Bitcoin. So it's kind of like all those interests align where, if you listen to the pod, we like talking about Bitcoin a lot. We talk about the general macro environment, and then we'll get into specific stocks as well if we're interested in it. So yeah, so that's the background, and I think I'd probably be investing on my own if I wasn't working in it, but certainly now that I'm working in it, I'm kind of in it all day, every day.
Yeah, so a bit of background myself. I'm in software sales, so I've worked in this industry my entire life. Um, don't have like any really technical background from college, but just living in this space, learning just a lot about software sales and being in the sales side, you get a lot of exposure to kind of what market trends are in the industry. So that's been really cool. Kind of like my experience working in tech, I've found over the years there's increasingly less of a space for people with just ideas and values that are like mine. It seems that there's kind of like this almost of a cult that has been fomented in the tech world, which is, I think everyone who's paying attention can understand that or is aware that this is going on, but I'm experiencing it firsthand. And that's a big reason why I wanted to start this podcast, to kind of be that a voice of reason and show other people in similar situations that they're not alone, that they're going through this too. But I speak about that a lot on the podcast, actually, just kind of navigating in the tech corporate world, kind of just navigating these woke values that these companies are espousing, and kind of my reaction to all that and how I handled it or wish I had. And it's crazy out there, but hopefully that with more people speaking up, that one day get to a world where everyone's values are respected, and that's ultimately all we want.
Yeah, I mean, you nailed it on the head there, both of you guys. I mean, I feel like I've heard stories of if you lean a certain direction, mostly like Republicans, but so to speak. But if you lean that way, you have to be kind of quiet about your views. But if you're the other way, people can be a little bit more outspoken, which seems pretty hypocritical. And I also think there's definitely like interesting views on other aspects. I'm curious to hear. I know you've talked about it a little bit in our spaces, SB, but the overall, I guess, reaction to Bitcoin, as far as like the stock bros or the fiat bros, as you like to call them, how they react to it. Are they starting to come around? Are they starting to understand the tech? Are they seeing the big momentum behind it? Or is it still? Are they still just not really getting it and understanding it?
Yeah, I think there's a couple different splits of what people think of it, and there's definitely the kind of the guy in the fiat world, and we'll use investments here because that's what I'm in. But it's the guy he's had a pretty successful life, so he's worked in or she's worked in investments for decades. They've got a nice investment portfolio built up. They've succeeded. There's been a bull market in both equities and bonds for the last several decades. So they've done pretty well. And from their perspective, there's nothing really wrong with the current system. I would say that, there's different levels of believing in the Fed or not, but there's generally this kind of TradFi attitude that the Fed can fix everything. So yeah, maybe they got a little bit ahead of themselves and printed too much money in 2020, but it'll be fixed. And I think that person, they don't get Bitcoin because they just don't get the use case for it. So you bring up Bitcoin to them and they just think it's useless speculation and they're not even going to try to understand it. So I think that's part one. I think the other part, some guys do see a potential for it, but and I can't believe they do, but they just can't get over the volatility aspect. So, I go and explain to them and I say, look, it's volatile now. It doesn't necessarily mean it's going to be volatile forever. If you're monetizing an asset 10 years after creation, it's going to be volatile. I'll give the example and I'll compare it to gold. Where do we think gold became the global monetary standard within 10 years after it was initially found? No. So obviously, a very different situation now versus thousands of years ago, but it's the same general concept that it's going to take a little bit of a while for mass adoption, and they just want it right now. So I think those are the two cases. I definitely think they're are people, and there's people at my work and people in the field that they get it 100% and they're in, and they have a decent chunk of their asset allocation in there. And I think those people, they're more of the open-minded, creative people, and not tooting my own horn, but they're the kind of people that they're at least open to the idea that the current monetary system we're in isn't working well. And I think I have a decent perspective where I've been working within this system. This is my livelihood. I think the system is crazy. I think the whatever we created in this kind of monster of a system that really has been pretty negative in terms of the rich getting richer and the poor getting poorer. I work in the system, I live the system, and I understand that there's something really wrong with it, and we need a new system. So I think that's the piece that there are some people there, but in general, I have found that that's been the minority.
All right. Well, TB, what about you? I know you're more of the tech side of things. So is there still, like, I guess, people open-minded to it? Is it a little bit a flip side of the coin? Like, are people more interested in the technology, but not necessarily like the Bitcoin ethos, if that makes sense?
Sorry about that. Just lost my AirPods died on me. Can you hear me now?
Yeah, I can hear you. Let's go for it.
All right, awesome. Sorry about that. Um, yeah, so I think I heard your question. How's like the tech world respond to Bitcoin?
Yeah, basically, are people understanding the tech, but and kind of embracing that aspect, but not necessarily the ethos, or is it just a full-on embrace of Bitcoin?
Yeah, so first from like I would say like an adoption perspective, um, the tech space is a really natural fit for cryptocurrency and blockchain technology. I would say the median age of folks that I work with is in that, probably that 25 to 32. That's, I've worked for very early stage startups, so that would be like about the median age. So people who relatively fresh out of college who are much more privy to mobile technology, digitization. So for them, something like Bitcoin just seems like a very natural fit. And also from their own experience, they've seen the value of their dollar just shrink year after year. So they're looking for an alternative form of currency. So um, it's been much more receptive compared to what SB's been describing. But in terms of blockchain technology, I would say some folks in our industry kind of they miss that a little bit. They kind of get caught up in just trying to make a quick buck off of this, and they're a little purely looking at this from a financial lens. So there's like, what's the next altcoin that's gonna pump and I can make a ton of money. But in my exact industry, the folks at the top and on the executive team, they're really looking forward on how they can leverage their current technology with blockchain. So they've been really interested in what's coming up with the metaverse and how blockchain is going to feed into that, and all the the currency that's going to flow into that. And they really want to meet people where they will be. So it's kind of more of a forward thinking strategy. So yeah, I would say overall tech has been very receptive to Bitcoin and blockchain. So it's pretty cool working in this because it kind of validates all my reasonings for being so pro Bitcoin.
Yeah, I definitely get that. But as a Bitcoin, I don't know if I want to call myself a Bitcoin maxi. I kind of find it hard to see. I guess the all the purposes for blockchain. I think that there's a lot of um, use cases for it, but I think that right now there's a lot of things that are being kind of overdone, and not everything necessarily needs to be on a blockchain. Are you seeing, I guess, somewhat of that where people are just trying to put everything on a blockchain, or is it? Do you think like the use cases are still kind of reasonable?
Yeah, I mean, I think we saw a very similar example back in 2016. I guess I'd say that was like the first surge of crypto, and everyone and their mother was talking about it, right? So I think we're seeing I don't know if you want to call it the second wave or another renewed rush, and specifically with NFTs, that's like been such a huge thing in the tech space where people are really trying to monetize and make a ton of money off of these pixelated pictures. And we saw with the Bored Ape Yacht Club, that's worth millions of dollars for each of them, and people are just trying to repeat that process now. So I see that people are kind of throwing a lot of silly money at that. So to your point, there's a lot of things getting thrown on the blockchain that you know, I'm a skeptic now. Who knows? Maybe it'll bear out in the future. I was once a skeptic of Bitcoin back in the day, so shows what I know. But yeah, I definitely think like everyone's just trying to profit off of this. Like I said, it's a get rich quick scheme type of mentality.
Well, I see that at my work as well, where there are a lot of people in finance that are interested in crypto. And I would say it's actually less the NFTs, but at least in my space, people really love the DeFi angle, and that is a tough one for me because it feels like every single day there's just a new DeFi hack, and you kind of wonder how are these funds even safe. And it's interesting because in the world of the current markets, I mean, if you look at the fixed income markets, you really can't, until a couple weeks ago, you can't get that great of a yield. I mean, what's the 10-year treasury? It's less than 2%. What's, investment grade bonds might be 100 basis points or 150 basis points outside of that, maybe high yield that's been backing up, but that could be another 2 or 3%. But even then, you're not really getting that much beyond 5 or 6%. Whereas these DeFi loans or what have you, or yield farming, I mean, they're just putting up ridiculous numbers. And so I sometimes talk to people in the space, and they're kind of getting hyped on this DeFi stuff. And I'm just looking at them saying, if something's too good to be true, it usually is. If you're looking at, even an 8% stablecoin yield, or I mean, people legitimately get excited about 100% plus annual yields, but they're going to hold it for a couple days or a week or something. So that kind of stuff, I just almost think like, some of the people actually admit it, where they really are in it for the short-term speculation as opposed to the long-term belief. And I would consider myself a Bitcoin maxi. I identify as a Bitcoin maxi. I'm in it for the long haul. I'm buying Bitcoin. I'm not buying anything else in the space. I'm buying Bitcoin. I never intend to sell it. Hopefully, way in the future, if I need to use some Bitcoin, I can probably borrow against it if and when it's the world reserve currency. But yeah, I think that's a difference of opinion, where I think the people thinking long term and holding long term absolutely are the Bitcoiners, and that is backed up by the data and the HODL waves and all that. And then I think the people, and sometimes the people are more interested in technology than sound money. I mean, a lot of the people I find that I know that are in crypto more than Bitcoin, they don't really understand the store of value use case, or they don't agree with it, or they might not understand why gold was ever used as money. So that's kind of their thought, and they're really much more in the technology. And it's at this stage of the game, I think if there were kind of I call them non-degenerate use cases, but I mean, if there were legitimate use cases out there, I think we'd have them. If there was a social network decentralized that could be built on Ethereum, right? Let's see it. People have been talking about that for several years. If there is, I keep seeing Chris Dixon is talking about this Helium Helium token, where they're trying to build a telecommunications network, but they don't have any infrastructure and assets about that. So how does that actually work? So yeah, it seems like there's a lot of, there's energy into the space, there's money into the space, obviously, but I'm sticking with the corn, and that's just going to be what I'm going to be doing.
Yeah, same here. And but I also, I kind of run into that a lot with, more of my friends that I talk to about this when they know they, hear about my podcast or stuff that I'm into. Some of them try to get me into their shit coins and things like that. And they'll tell me they're in the deep ends of some Reddit subreddit, which has like, 100 or very few amount of people, and I have to go through this back way to purchase this coin, and that it's so little that if you buy a little bit now and it becomes the next Doge or Shiba or whatever it is, it's going to shoot to the moon. But I guess my personal opinion on that is, I think it's just people trying to reach for that get rich quick scheme, but I think it's more so because they need to. They see the amount of inflation and everything going up, where the general the average 9 to 11% yield on the S&P 500 just isn't appealing anymore, and they need to get those big yields. And especially with inflation and the crazy macro environment that we're in right now, everybody's just kind of chasing that yield because they're seeing the devaluing of their dollar. And so I know we've kind of talked about this briefly in our spaces, but I know that you SB specifically, you go into the that group of people that's more middle class, I guess, that has to be like a part-time hedge fund manager on the side for themselves to kind of continue to grow their wealth. So why don't you get into your thoughts about that, and why you think that is?
Yeah, well, I will get into that, but first I'll say, when you were talking about the Reddits and going to crazy places to buy, I mean, TV, that was us in 2017.
Yeah, I mean, we were on every single crypto exchange there was, and I was buying God knows what, like Ant shares, now known as Neo, Lisk, all these altcoins, and oh
Amazing.
my God, yeah, I like regret how much Bitcoin I burned to buy these things.
Well, yeah, I remember going in and it was sort of Bitcoin was boring, and that time too in mid 2017, which is when we were first getting into it, it was really expensive to send Bitcoin too. So I remember $30 plus to do a transaction, because that was right around when the fork happened and Bitcoin Cash split off. So yeah, I remember you'd buy Ethereum and then you'd just send it. You'd send Ethereum onto a bunch of different exchanges, buy the hottest coin, and then hope it got even hotter. But yeah, it's totally is people trying to get rich quick. But yeah, those were funny times. But to your question, yeah, absolutely. So I think like Safety and Pierre Richard of Bitcoiners, they were the first guys that kind of I listened to that really crystallized the point of you have to work twice for your money. So you not only have to work for it in your everyday job, but then you go home and you say, well, inflation is 2, 3, 4% officially. It's probably more like 7 to 10%. If you have the cash sitting in a bank account, it's not earning anything. You have to basically invest in stocks. I mean, what do you do with your 401k money? I mean, everyone immediately invests at least the company match in that because it's a good deal. But it's just kind of that's the default. And what people haven't realized is that the stock market, it's not really saving. It's still a risky investment. It would be one thing if we went back to our parents' generation and they put money into a bank account and they got 7%, or they put it in, you could buy treasury bonds 20, 30 years ago that were 10%, and that was risk-free. I mean, the treasury bond is the risk-free rate. And that's completely different than the stock market. And we're seeing it now where it seems like the Fed probably blew a decent stock market bubble, or at least a tech bubble over the past 18 months with all the liquidity. And, if you're someone that invests in indices, you're down. But, if you're someone who's invested in some of these high flying tech stocks, and I have some of those stocks for sure, because some of these companies are doing really interesting things, you could be down 50% plus on your investments. It's unbelievable. So I think that unfortunately we're just being pushed and pushed and pushed further along the risk curve in order to try to beat inflation. And that's just no way for a country to run. It's no way for a person to have to either stress about it, or they outsource it to a financial advisor and then they're paying even more money that way. I mean, it's just the incentives are all misaligned. The situation is, we're just in a bad spot where we are so financialized as a country, where we have to be always thinking about this stuff. And I think there's a lot of problems in the country, but people obsessing over money, I think that's absolutely an issue.
Yeah, I definitely agree with that. I was talking to a friend the other day that said, they think that my generation now is one of the few, or maybe the first one that realizes that it's not going to cut it with just one stream of income. You can't save your way to it. Our parents kind of grew us or raised us on just save, invest in your 401k, do the company match, work hard, and you'll be fine. But my generation has seemed to be more creative and find other ways to make money. And so I'm seeing a lot of people work a bunch of different jobs and things like that, just to increase their income at a rapid rate. And it's seemingly it doesn't seem like their income's growing quick enough. We have the conflict going on in Russia and Ukraine, and I want to get your guys' thoughts on that and how that's overall affecting. But a quick little side note here is just I think we had Jen Psaki and Biden cut off the oil and gas from Russia recently, I think as of today. And at least here in the state of Florida, we're hitting all-time highs in gas. And I think the average across the country is, I believe, at $4.11 per gallon, which I think, at the end of 2020, it was just around $2 or under $2.50. So we're seeing everything, not only gas, but food prices and everything else skyrocket. And so to your point, SB, the inflation being reported as, a couple percentage points obviously isn't taking these prices into effect either. So how do you think like the Russia and Ukraine situation is going to play out? Do you think, we're just kind of in the way of the Jack Dorsey hyperinflation, or do you think we'll somehow figure out a way how to cool this thing down?
On our current track, I don't think we have the right answer, or we have heard the right answer from the current administration. I mean, I think it's a combination of factors. When we think about the pandemic over the past couple of years, people were driving less, so production in our refineries was lowered, and it never increased to meet the demand once things open up back up. But then also you have an administration that is highly resistant to oil, and they've put all their chips on the table for green energy. And frankly, the rest of the Western Hemisphere has done the same. We've seen the EU, they've really just hindered themselves by becoming overly reliant now on Russia to provide oil, and they don't have the means of providing their own because they've gone so far into green energy. And right now, what we're hearing is that the solution to all this inflation is, yeah, we're going to cut off Russian imports of oil, which I think was the right call to be frank, but they're not countering that by then saying we are going to now be autonomous and providing our own oil. They still want to pursue these these virtue signaling green energy pursuits, and it's not going to answer the problem. And we're not hearing any empathy from the administration. We had Pete Buttigieg on the other day and Jen Psaki just saying, it's your patriotic duty. You can buy an electric vehicle, which costs what, $60,000-$70,000. So they're trying to say that's the solution, and it's not. For the average American who relies on oil, if that's part of their job, they're feeling real pain right now. So I don't see us on our current track. I don't see that resolving the issue that we have now.
Yeah, on the energy point, part of the last episode title we had was on our podcast, U.S. energy policy stays woke while Americans go broke. So this is exactly what's been happening where, yeah, the U.S. opened themselves up, and the West as well, to Russia having a lot of power here. I mean, I did think it was interesting today when you had this ridiculous reversal in stocks when I think the headline that came out was that Russia was, or I think the headline was that Ukraine was open to signaling they would not be, or committing that they would not be in NATO. And then I think stocks pretty much, or like the tech stocks, they went up from, maybe they were -1% on the day to 2%. And I think I forget exactly where we ended, but basically that shows you that if and when there is a resolution, there's probably a lot of upside. I know Bitcoin quickly jumped out to above 39K. So I think that's the positive. And if you think about what Russia wants to accomplish from their perspective, I could see a situation in which it's not an immediate win by Russia. It's not an immediate conquering of the country, which I think some people kind of initially thought. But Ukraine's a pretty big country, right? So it's not going to be anything that settles down immediately. But could this be done in 4 to 6 weeks? Maybe. We don't know for sure, but it seems like Russia's making progress according to them to take parts of Ukraine. So if we do end up getting a resolution, I think there's a positive, which the market today obviously kind of implied. The problem, of course, is that if and when we do get that resolution, we still have high inflation, we still have terrible domestic policies, we still have the Fed deciding on whether they want to raise interest rates or not. So it's not like we kind of get out of the war and then it's totally gangbusters. And now I'm seeing that maybe GDP growth for the next quarter could even be negative. And I just think that's just ludicrous to consider that the economy, the output was so negative in 2020 when we shut down, and it's still not back to normal. And yet we might even have a recession soon. So that's just unbelievable. So yeah, we've had a pretty significant decline. Not that we can't decline further, but the trouble is just that there's not much to look forward to on the other side of this conflict ending. But certainly I think a conflict ending and there not being nuclear war is a positive. Obviously it's a positive, but you're starting to see a lot of kind of experts say, and people in the market say, yeah, I am worried about a nuclear war. I'm not saying it's 50% or even 25%, but it's kind of creeping up the probability list. And if that's the case, then that means if there is not one, then we can, rip back a little bit. But yeah, generally it's just it's a tough market out there. It's really volatile, and there's a lot of there's a lot of negative news out there beyond just one of several options. So yeah, it's a tough one.
Yeah, for sure. And I think it's just, going to get tougher because there's a lot of uncertainties that you kind of listed out there, whether we raise rates and how quickly this conflict will end, or if it'll be dragged out, or what. And so I think that there's kind of deeper rooted issues that, you kind of alluded to back in 2020 when this whole, COVID pandemic kind of started. And I kind of want to get into some of these like shadow companies that saw extreme growth throughout the pandemic, strictly in my opinion, because they had like, easy access to capital, and they kept kicking the can down the road. They never really, made any money or anything like that. And I think that growth stocks are going to kind of, hit a pretty tough way coming here soon. I originally invested in ARK, and a couple of them I got fooled by Kathy Wood and her returns.
Same.
I think in 2020, maybe like some other people did, but I have since sold at a loss, unfortunately. So maybe I'm just a bad investor or just getting into it. But what do you guys think of like these shadow companies and these growth companies? Do you think that we're going to have a lot of these, I guess, tech and growth companies just kind of bomb in the next couple years? Is that going to be, kind of some of the runoff effect that we see from, this COVID pandemic sort of coming out of it, money printing, crazy inflation, and then, now this Russia and Ukraine conflict?
Yeah, I think we're going to have. I think some companies are going to fail, but then some, it's going to be an incredible opportunity. Because I think the situation we find ourselves in now is that a lot companies historically over these past several years were totally running deficits, or they weren't free cash flow positive at all. And it was all about what is the future growth. So the fundamentals didn't matter. It was just the growth numbers. And now we're getting to a point where actually the fundamentals matter again. And what investors are going to have to do which they didn't have to do over the last several years, they're going to have to determine, is this company actually investing for growth and they have a long runway ahead of them? And the reason they're free cash flow neutral to negative is that they actually have a lot of growth ahead. Or are these companies just simply structurally unprofitable? They've been maybe hiding or miscategorizing OpEx as CapEx, and they basically have a structurally, pretty weak business. And so the example that I like talking about is Netflix, and that's one that everybody knows. So I historically have always disliked the fact that they were running such huge cash deficits. They were running, I think, over $3 billion at least one year, and they were originally for 2020, before COVID helped them with getting a lot more subs and slowing spending. They were going to lose, I think, $2 billion plus at least in 2020. And I can understand a little bit of investment, but when you're losing $3 billion at, maybe it was 150 million worldwide subs at the time, I'm not really sure I like that. It kind of feels irresponsible to me to be losing $3 billion plus dollars. So I think a company like that, and there's other companies in this space, like Roku, for example, is one where, they had a huge multiple, and then they're now saying they're investing for growth, and that stocks took a tumble. But I think these companies that they just kind of, and the market was giving it to them too, but these companies themselves chased the growth metrics over maybe spending more efficiently. And that's why when I look at the media space, I find it very interesting that you look at a company like, I'll give two examples versus Netflix. So if you look at a company like Disney versus Netflix, Disney's taken a lot longer to ramp up the original content, but they're trying to have, very high caliber content. The Marvel series, FX is ramping content. So they're not throwing a smattering of content at you. They're trying to be very particular about having good content. And they're able to do that because they have an existing business that produces a lot of free cash flow, and they have a lot of IP and library to work off of. So that's one example. And then alternatively, I'll look at Apple TV and say that Apple TV made the decision early on that they were not going to license or rent any content. So for example, you've got Netflix is paying over $100 million a year to rent Seinfeld from Sony, for example. Apple hasn't done that. Apple's only gone originals. And what has that meant? Well, it's meant that initially there just haven't been as many Apple TV Plus subscribers as there are for other streaming services, just because there's just not that much content, right? In 2019, 2020, and they were hurt by the production slowdown as well with COVID. There were 10, 15, 20 shows all in the first season. So, maybe you liked one show, but it clearly couldn't serve as your main streamer. Well, now it's 2022, 23, 24. They're starting to get a lot of movies in the service. If they get 20 to 25 new shows a year, well, then you've got, the 20 shows that premiered in 2019. You've got season 3 of those in 2022. You've got another 20 coming online in the next year in 2020 and 21. So all of a sudden, there's a ton of content on the service that a lot of people actually haven't watched because they didn't have the service, because they didn't need to have it because there was so little content. So Apple's making a very big upfront investment, which they can do because they make money from their other businesses, of course, but they're making a very intense upfront investment, but they're not wasting it on what I would say is renting content like Netflix is, or they're not wasting it on, they're attempting to make prestige HBO quality shows every single show. They're not making these mediocre, some of these shows that Netflix makes are pretty terrible, I think. So they're not doing that. And then finally on the Apple side, we just heard today that they are doing a streaming deal with Major League Baseball. So I think that's fascinating, so you get all these baseball fans that are probably an older demo too, that they're all of a sudden, they want to watch their team on a Friday night, and they can't watch it on cable because these games are now exclusive to Apple. So you pop on Apple, you've never heard of it before, you've never been on the Apple service, and when you get Apple TV to watch this game, it is an instant customer acquisition. Now it's not not expensive by any means, but instant customer acquisition. And that person that signs up on Apple is going to look at the rest of that content and is probably going to watch some of it. So Apple's kind of chosen to be a little bit more patient than a company like Netflix, play the longer game and say, we'll create this great content. Like everyone saw that John Hamm ad where he was going through all the Apple content they had on the platform. We will make all this great content first. It'll take a little bit of time. We're not going to win immediately, but then we'll layer it on MLB. Then we might layer it on Sunday Ticket. And then we really start to get into groove where we have a lot more customers, a lot more subscribers coming on. So we're getting revenue from that and can invest back in the business. So I very much like to think of myself as a long-term thinker. I always want, when I'm looking at companies, make the investments now because that's the best possible way you're going to grow. And I think we're going forward, we really are going to see a difference between companies that invested properly versus and actually invested for growth versus these companies that just, and Netflix accounting, you can look at it. It's been a topic of late. Maybe Netflix, I'm sure there's plenty of other companies like this too, but maybe they were classifying some OpEx as actually CapEx and they just have that structurally lower profitable business. So yeah, I think it's going to be volatile, but it's going to be a fun market for people really doing the work and that have a convicted view on something, because on the flip side to what you said, if a company is a really great company and they do happen to be investing for the future and have negative free cash flow, they're going to get dinged with everyone else. And then you can go in and say, no, I actually think this is a great company. They're investing in great things for the future. I'm buying low when growth stocks are on sale, and you'll make a fortune that way.
Yeah, I mean, I
So
agree.
like somewhat.
Go ahead, TB.
Sorry, go. Somewhat related to this, was talking about companies that kind of fallen apart before. I mean, not loosely related to tech, but you look at Peloton, they've, set their goals much too high. And, I've friends who actually work there and they're having mass layoffs right now because they just can't perform at the level that they were during the pandemic. They were one of the unique companies that benefited from it when everyone was locked down and the government was handing out stimulus checks. So everyone was getting a brand new Peloton bike, myself included. But now they can't keep up with all those lofty goals that they had projected for themselves. So now that they're looking at potentially being bought out by a bidder, and look who's looking at them, you have Amazon and Apple, as we're talking about, and I think even Disney's involved as well as a potential bidder. So these companies are kind of trying to really make themselves, expand their tentacles and get their customers more entrenched in their network, if you will. So, for Apple, it's a really good fit because they just came out with Apple Fitness. Amazon's really becoming the, all in one place. They're really investing in their video platform and video games specifically. Companies like that are just really forward thinking, and Peloton's really suffering for that because their projections were much too high and that were artificially inflated in a very unique scenario, and they didn't really plan ahead for when things went back to normal. They were kind of banking on everyone counting on Peloton as their home gym, and now things are opening back up. That's not really as appealing as it once was.
Yeah, TB, I think that's a great point. I was thinking of Peloton as I was talking as well. And one addition to that is that I think there's companies out there, and investors did this too, where they projected that the growth they saw in the pandemic was actually the long-term growth of the business. Or maybe they thought, oh, the TAM, the total addressable market that we projected prior to the pandemic, it actually got a lot bigger. And in reality, the TAM didn't get bigger at all. It just got filled up during the pandemic, and it's the same company. So I think there's a lot of that, and people so far that have called that correctly with some of these companies like Peloton. If you were short Peloton from high hundreds, you're sitting here pretty right now.
Yeah, and I think to both of your points, it seems like a lot of these companies, they have some sort of revenue that they were able to fall back on prior to the pandemic. So like Apple was brought up, right? So Apple has their computers, their phones, their AirPods, which have done really well as well. And then now they're willing to take a little bit more risks and not need to make money on Apple Plus, Apple TV. And they're even making deals with the MLB in the midst of this lockout, which I think is pretty interesting as well. But but I'm a baseball guy too, so I do enjoy Friday night baseball and everything like that. And they're finding like a big problem with baseball streaming services. I don't know if you guys are baseball guys or anything like that, but I've had MLB TV for the past couple seasons, and it's a pain in the ass. I can't watch my own. If I'm in Tampa, so if I want to watch the Rays, I can't watch it on the MLB streaming service because I have to watch it on like Fox or whatever, because it's a local game and it's blacked out. So it doesn't really make any sense. And then, I'm a Cubs fan. So some games that are on Marquee Network, I don't get access to on the MLB TV either. So it's a real problem. And hopefully, Apple could kind of come in and swoop in and fix some of that problem. And then to your point about Peloton too, it's the same thing. It's essentially a bike with an iPad. And then now these big companies like Amazon, Apple, and these other companies that could come in and swoop it. Now they have their chance to put their content on this bike, where Peloton, just kind of has their own, workout content. Well, maybe I want to watch a movie while riding the bike for an hour or something, instead of doing this intense cardio workout. I think that kind of makes it reach a different demo, and from there it'll kind of help it, I guess, somewhat expand too. So do you think like a lot of these big companies, that have like the constant cash flow coming in are just going to start swallowing up? Because it sounds like, Amazon, Apple, and like, the successful FANG stocks, maybe we should change the N to an M for Microsoft or something, are going to start swallowing up some of these little guys that are making riskier investments that aren't necessarily panning out.
Yeah,
In my space.
Yeah, go ahead, TV.
Yeah, for sure. Yeah, just a really quick note on mine, because SB, I know you're way more educated in this area, but I'm seeing it firsthand right now in my space, and kind of the startup, or even the ones that are a little more established, but you wouldn't call them, legacy enterprise by any means. Right now, I'm seeing a lot of private equity firms buying up a lot of these tech companies. So um, if that's happening in that space, then to your point, then absolutely, I could see these giant conglomerations absolutely swallowing up these, not, I wouldn't call them little guys, but in comparison, yeah, I could definitely see them swallowing them up.
That's fascinating to hear, because I can totally see it, and it makes me think. We're Bitcoiners here. We like the long term thinking. It's companies that have a good business and a strong balance sheet. Those are the ones that should survive. So a company I like talking about, Flexport, they have Bitcoin on their balance sheet, but they just raised $1 billion at a 9 billion valuation, I think. So Flexport's like an operating system for freight worldwide. So freight containers and ships and airplanes that are shipping and whatnot. And they raised the $1 billion, and then they also, after that, the CEO is active on Twitter. He had a thread that they have 1.6 billion of assets in the company. So you kind of think, oh, that's interesting. Why did they just raise $1 billion after they had raised 1 billion in 20, I think it was 19, and they still had 600 billion on the balance sheet? So I think partly is that they're going to go out and buy some Bitcoin, because he's a big he said that they own Bitcoin. But I think more importantly, he said we need to have a strong balance sheet, because for whatever hits us, we need to be ready for it, and especially in a fast moving space like freight. And I think that's a really smart call. We're going to see it with all of these bigger companies having a strong balance sheet, being able to pounce at the right time. This is long-term strategic thinking, where maybe you don't always go 100 miles an hour. You have that strong balance sheet. So then when the time comes when a lot of people are stressed, and maybe people are getting margin calls and people got to sell distressed equity, that's when you come in as the strong company. And I think that I want to live in a world where every company has a strong balance sheet, because I think that's just going to be a better world and better economy.
Yeah, I agree with that too. And I think, we're kind of getting in this environment where it's getting a little bit harder to get access to or it's going to get harder to get access to money. So a lot of these companies that, like you said, that don't make good investments or are having, tough balance sheets are going to have to find ways to either get creative, or they're going to get either, absorbed by bigger guys like Apple, Amazon, what have you, or, they're just going to fail. So I think we kind of saw that in a microcosm of the restaurant industry, at least on local levels in certain areas of the United States. And I know tahinis in Canada has gotten really popular for accepting Bitcoin and things like that. So I think as far as like, the smaller guys go, it might be a trend to sort of see a lot of these smaller businesses accept Bitcoin or payments through the Lightning Network, whether that's, through Strike or, Block implements something like that, because they already have like a peer-to-peer network with a lot of small businesses that use. But I think it's going to be a tough time to be a small business owner in the next couple of years. And I think, the ones that get creative and find ways to lower their overhead costs, because, minimum wage is going up across the country. And then, same with corporate taxes. So I don't know how it's all going to play out. I have a very bad feeling about it, and I don't, feel very strongly about small businesses going forward. But yeah, I just think overall, the companies that get creative and find ways to lower expenses are the ones that can, I guess, prevail. But I mean, a time will tell, I guess. Do you guys have any thoughts about that?
Well, it's also these companies that they don't require constant access to the debt markets. I mean, we've talked about this on the spaces as well, where some of these companies are just incredibly over-levered. And maybe they're not over-levered in the sense of the 2022 markets, but I mean, there's so many companies out there that are leveraging up to buy back stock, and then the stock immediately falls 50% over the course of 6 months. So, I mean, that's just an incredible value destruction. And, I see it in my space where a lot of these companies they're levering up to buy back stock rather than investing in the business. And actually, if we stay in the streaming theme, Viacom is a company that if you go way back and you look at Viacom's stock price, I think they were buying their stock at like 70 to 100 for several years. AMC Networks is another one, buying their stock way high. And these stocks are 30, 40 right now. So they not only wasted so much money doing that, but that money could have been spent on more content, on streaming, on something like that. So you're getting these companies that are spending on financial engineering on one, and then secondly, they're carrying an irresponsible amount of debt where they would not be able to repay the debt. They always have to refinance. And then you get into, that's just what the federal government does. When we raise debt, we have no intention of ever paying it back off with earnings or tax, I guess, if you wanted to call it that, from the US taxpayer base. We only have an intention to just grow the general economy so we have better metrics, and then we refinance it, and our GDP to debt ratio looks better. So I see that same thing playing out in the world that I look at, which is these companies have way too much debt. They won't be able to pay it back with their current free cash flow. And then what happens if there's a recession? What if their cash flow gets cut in half? And so now all of a sudden they wouldn't have access to the debt markets if we had a situation like that, and they can't pay the debt down because they have worse earnings. It means a recipe for disaster. So like we've been saying, these companies that are long-term thinking and they generate a lot of cash already and have a strong balance sheet, they're going to be the ones that are going to prosper in the long run.
Yeah, exactly. So yeah, I mean, a lot of interesting times ahead. So we've been going for here about like an hour or so. So I think we'll wrap it up here. This is it for the Sunday Scaries Stock Talk podcast. I have the co-host of the Woke Antidote Podcast. We got TB here and SB. You guys have put out 6 episodes to date right now. Do you guys put it on like a set schedule, or is it just I guess when you got time to rip it out?
Yeah, we started off recording every Sunday, but just with the way the world's going these days, we've started moving to doing Tuesdays and Sundays now. So who knows, might even start doing more if it necessitates. But yeah, it's been a fun ride for sure.
Yeah, and I would encourage everyone too. So if you check out our podcast or check out the Twitter account that we run, we got a bunch of hashtags for everybody. So if you are in agreement with us and you think that there's too much wokeness in the world, we got hashtag woke in the wild, hashtag libs gone too far, epic gaslighting, and woke whiplash. So those are kind of self-explanatory, but woke in the wild, it's when you just see some random wokeness. Libs gone too far, basically when they have just gone crazy on an issue. Epic gaslighting, of course, and then woke whiplash is our latest one. It's when like in the State of the Union, you had Biden attempt to claim that the Democrats were for funding the police, which was just a complete 180 from what the Democrats had been saying a few months back. So yeah, if you've got any examples of those, definitely tweet them, tweet at us, and maybe we'll have you on the pod.
Yeah, for sure. I've been having fun with those hashtags on Twitter as well. I like to search them and see all the crazy shit that's going on that you guys are finding. So definitely follow them on Twitter at the Woke Antidote, and find them on Spotify. And are you guys everywhere too? Everywhere you can find your podcasts. Like
We are
Anchor,
gonna be on Apple Podcasts soon.
Okay. All right, sounds good. Yeah, so they're on Spotify right now. They'll be on Apple Podcasts soon. Give them a follow and yeah, check them out. They got 6 episodes. I've listened to every single one. I think each one's getting better and better. So they add a little bit of a sports talk in there too, which I enjoy as well. It was a tough look for UTB on your Bengals pick, or yeah, or what was it, Rams? You're off by half a point, right? So
Oh,
Vegas always knows.
what a beat that was. That's why they have
Tough
tall
one.
buildings.
Yeah, exactly. All right. Well, that's it for the Sunday Scary Stock Talk podcast. We'll be back and talk to you guys next week.